Welcome back, everyone. This is a brief update on news from the oil market. WTI prices continued their downward movement in the past days, forming already 4 consecutive daily sessions on a sell-off. Even though most analysts and media headlines are related to the coronavirus, in this report, our aim is to focus completely on the oil market and its technical and fundamental metrics. We are making a start with the latest weekly readings from the EIA and the API organizations in the US, which both indicated an increase in stockpiles of plus 0.45 million and plus 1.3 million barrels correspondingly. Yet, looking into previous weekly readings, we have come to acknowledge the fact that the API has delivered 4 consecutive surpluses since the start of February, while the EIA has delivered 5 consecutive surpluses since the last week of January. This information is telling us that in the US, oil stockpiles are building up significantly, and even with the small increases added this week from both pre-mentioned organizations, the effect may have been dramatic for oil prices. The numbers released confirm the oil market sell-off as supply overweights demand and sends oil prices lower. On other matters, on the 12th of February, the OPEC monthly report was released, providing important and valuable information for oil. Even though global oil demand is expected to increase for 2020, a downward revision by 0.23 million barrels per day was made compared to the previous month's report estimation. World oil demand is expected to increase by 0.99 million barrels per day and average 100.73 million barrels per day for 2020. On the other hand, oil supply is also expected to be lower in 2020. In our view, the OPEC Plus group could extend its production cuts into the next months, while the US production could also reach a ceiling during 2020 and correct lower or maintain its current levels. However, the US is expected to remain the largest oil producer around the world, and a possible decrease in its oil production could be countered by increased activities of other countries like Brazil or Australia. On a separate note, in the US, they have set the ground for a major turn to cleaner marine fuels. The US has been preparing for a change to cleaner fuels for a decade or so, with an amount approximately $100 billion invested for this purpose. Finally, the International Maritime Organization's new low sulfur emission standard for marine fuels went into effect on January 1st without significant market disruption. So far, the impact has been limited on other oil products like diesel, and no significant market reaction was observed on prices. Yet, the environmental gain could be great, with some believing that the reduction of pollution could lead to better health conditions due to cleaner air. As a conclusion, the oil market has shown tremendous sensitivity to the current financial market sell-off, and the momentum may even continue. Yet, most of the fear and uncertainty at the moment is that the Chinese economy is expected to slow down for the first half of 2020, and that could affect the oil market performance even further. For a more in-depth investigation and technical analysis, please refer to our written report. Also, for more information and trading ideas, you can visit our webpage, follow us on Twitter, like us on Facebook, or subscribe to our YouTube channel. From all of us here at IronFX, best wishes for solid trading.